Greetings, members one and all of the Salivation Nation. In the wake of the U.S.-North Korea summit, looks like gold is taking a little bit of a breather. It's fallen below $1,300 to finish at a one-week low in wake of the Trump-Kim pact. This article comes to us from Market Watch. U.S. Federal Reserve decision on interest rates is due on Wednesday. That's tomorrow. And so it'll be interesting to see where that falls. And will that push gold down even further? I believe it could, but maybe not by a whole lot. You know, it's amazing. Gold has really held on pretty strong with all things considered. And, of course, there's been a lot happening around that have caused it to kind of stay up near the $1,300 level. But some had predicted that gold would fall to $1,150 or below $1,200, and that has not happened. It's been flirting with $1,250 for a while, for a little bit there, but it's definitely staying well above that, and it's hovering around $1,300. Gold prices fell below $1,300 an ounce on Tuesday as an agreement between the U.S. and North Korea aimed at denuclearizing the Korean peninsula muted demand for the haven metal ahead of an expected interest rate hike by the Federal Reserve. And so I think there's two things at play, a two-pronged situation here. We've got, you know, the anticipation that the rate hike will occur on Wednesday, and it will probably be a quarter-point rate hike, as the Federal Reserve had been doing. And then the other thing is a successful summit meeting between Trump and Kim. The move came as a report showed U.S. consumer inflation is trending higher, a signal that markets believe will push the Federal Reserve into raising interest rates this week and possibly again later this year. So there, the August gold futures fell 380 or 0.2% to settle at $12.9940 an ounce after tapping a high near 1305 during this session. U.S. stocks were mixed but largely held their ground in the wake of the geopolitical headlines. In general, the lowering of geopolitical risk are a good thing, but the lack of specifics from the meeting, including the lack of timelines, leave little to trade on, and so the impact on markets from the summit has been negligible, said Chris Zaccarelli, Chief Investment Officer with Independent Advisor Alliance. And most of the media are really kind of going after and criticizing Trump for not getting specifics, but no specifics were ever promised during this meeting. I think the biggest surprise is the ceasing of joint exercises from South Korea and the United States. And those are exercises that they've been doing and more than likely won't change and can be reinstituted at any time. And other than that, you know, it was always mentioned by Donald Trump that this is a long process, and this was just the beginning of a long process. U.S. President Donald Trump and North Korean leader Kim Jong-un signed a joint document pledging to work towards the complete denuclearization of the Korean peninsula, but the statement was criticized as lacking detail and verification of the process. And as I mentioned earlier, again, it was never any promise that there was going to be any concrete agreement from this meeting. But the fact that they signed with the ultimate goal of denuclearization is a step in the right direction, considering the two world leaders have never met before, and already a lot of it's been happening behind the scenes, including the release of 3 hostages. And I think by and large the markets were exactly reacting to that, meaning that gold is kind of on the back burner as a safe haven metal. Had Donald Trump walked out or Kim Jong-un walked out of that meeting, well, it may have been a different story with gold. Even with the anticipated rate hike tomorrow, I believe we would have seen gold probably climb up, and silver as well along with it. I believe if there would have been a walkout of the meeting, we would have seen gold go up to, 1320s possibly. Completion for the market attention also fixed interest rate policy. The Federal Reserve is expected to raise interest rates after its 2-day meeting, which ends Wednesday. The European Central Bank policymakers are expected to announce the timing of a reduction of its crisis-era asset purchase initiative, when it meets on Thursday. Essentially, that means that that's their version of quantitative easing. Michael Armbruster, managing partner at Altavest, said he continues to look for gold to trade sideways to lower based off of rising U.S. interest rates and a strengthening U.S. dollar. Gold has a history of making big moves in the wake of FOMC announcements. He said typically those big post-FOMC moves tend to be on the downside. My advice as the gold bugs is to keep your powder dry. On Tuesday, the ICE US dollar index was up 0.24%. A measure of the dollar against a half dozen major currencies was up 0.3%. It has climbed by roughly 4% so far this quarter, helping to put pressure on dollar-denominated gold prices, which have lost roughly 2% of the quarter according to FactSet data. As for Tuesday's economic data, of the recording of this video, government data showed that the consumer price index has risen 2.8% in the past 12 months, up for 2.5% in April. That's the highest level since nearly 2012. The yearly increase in the core rate edged up to 2.2%. Inflation can be a mixed bag for gold. It can put pressure on central banks to hike rates, hurting non-yielding bullion. But gold has historically maintained a role as an inflation hedge for long-term investors, and that's exactly what it's for. It is a hedge. So if raising rates will suppress gold's price, and and again, that is a part of what I call transparent manipulation, which means the government is doing its best to stave off inflation, which means that a byproduct of that means that gold will probably go down. And silver fell to 16,891 an ounce. July copper ended $3.25 a pound, down 0.2%. And platinum has lost a little bit to $901.50 an ounce. And palladium declined to $1,015 an ounce for the futures there. Quite interesting indeed. I see where these things are headed, and what the markets will hold. I believe that we will see gold probably go down maybe a little bit more as the week draws out, but probably not by too much. We shall see. Here, let's take a call from a scammer. Hello, this is Sal.
Based on your company history and business tape, you're qualified for an unsecured loan up to $95,000.
Oh, that's great.
Your credit is not needed, and there's no upfront fee. To learn more, press 1 now.
Well, of course. We're going to press 1, of course. We're going to find out. And we're going to be on hold music. We're going to see what they think about the Trump summit.
Hello, this is Paul. How much working capital are you looking for right now?
Paul, I need a lot of working capital because I need to travel soon to get intimate details on the Kim Jong-un and Donald Trump summit. Can you help me with that?
Yeah, I wish I could. I would use money for the same thing, but no, I can't help you with that.
Working capital, Paul.
Tell me if you find out anything.
What's that? What'd you say?
Tell me if you find out anything.
Yeah, I will definitely let you know if I find out. I think we're getting close because gold and silver, I think, are going to continue to go down as the Fed meets tomorrow to raise interest rates. What are your thoughts on that?
Well, if interest rates go up, gold and silver price will start going up as well. All right, have a good day.
Wait, hold on a second, Paul. That's the antithesis to what Market Watch is saying and what most economists say. And you hung up on me, Paul. That's not very good. You don't know a darn thing about precious metals or anything else, but that's okay. It was fun, Paul. And let me see here. I wonder if we can call Paul back. Well, no, we can't. I know we can't call him back, but it was fun. So there you have it. We had a little thought from Paul the scammer about the markets and where things are going, and he thinks that gold and silver will go up when the Fed raises the rates, but I don't think that's going to happen. But hey, I could be wrong. Paul the scammer could be right. We shall see. We'll find out tomorrow, at least as of the recording. You could be watching this video 3 years from now, and you'll still wait for tomorrow for the rates to go up and gold to go down. I believe that in 3 years' time, we'll be in the exact same place, sans a summit, but the Fed may raise the rates again 3 years from today. So we'll see. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching, and encourage you to please rate, comment, and subscribe.